You're watching Stock Watch this week. I'm your host, Zinati Guma, and joining me for some stock-related analysis is Sanelisiwe Tofile from All Weather Capital. Thank you so much for your time, Sanelisiwe. Now, a lot has gone on. We've had a lot of company results coming out this week, particularly on the JSE, as it seems that in the US, the earnings season is coming to a halt. Just what stood out for you, I guess, maybe just on the macro front, considering also that we have had the South African Reserve Bank cut interest rates for the second time in the cycle.
Yeah, Zanati, I think in terms of macro, since the US election with the Republicans and Trump winning, I think a lot of fear is that obviously the US is going to become a bit more protectionist, increase trade tariffs, potentially some increase in conflict between the US and China at some level. So despite potentially an end coming to the Ukraine war and possibly the Middle Eastern conflict, there's still going to be some elevated conflicts elsewhere. So you've seen a bit of strength in the dollar, kind of its safe haven appeal coming through. The gold price hasn't really changed all that much. I mean, might have been some weakness here and there, but it's still somewhat elevated. So it kind of represents, again, the safe haven appeal.
Yeah.
I think the US treasuries have remained, the yields have actually stabilized in sort of the 450 range. And that kind of speaks to possibly less rate cuts from the Fed than expected. Again, the US economy has been somewhat resilient, to be fair. So I think the Fed is comfortable kind of waiting on that. So it's been a bit of uncertainty around first pre-election about what the election outcome is going to be in the US. And now with Trump coming in, people are thinking maybe there's some tariffs coming and potentially some negative impact, especially for EM. So I think you're seeing that coming through in some of the moves.
Yeah, and I mean, it's quite interesting because, I mean, you talk about the fact that there's maybe this narrative now that we might see less cuts from the Fed. And I actually didn't think that it would filter through to South Africa, but it did, seeming that the governor there took a more hawkish tone yesterday. But yeah, we will see with the next meetings next year. Well, let's go into some, because obviously monetary policy affecting a lot of the companies that we have on the JSE. Let's actually go into Pick n Pay versus Boxer. And of course, Boxer is listing next week on Wednesday. Yes. So there's a question here. I need some advice on my Pick n Pay shares. I got in at 31 Rand 40. Should I sell and buy Boxer directly as I want a Boxer exposure? Or do you think Pick n Pay shares will rally if Boxer rallies on the 28th of November? Quite an interesting one, because a lot of people have been trying to figure out if they should keep their Pick n Pay shares. Of course, you still get that exposure, but at the same time, you get direct exposure if you go directly for the IPO. What is your take on that?
So, I mean, obviously, as the viewer's question suggests, if you want the Boxer exposure directly, you will have that opportunity after next Wednesday. So, I mean, if that's what you wanted, then I suppose you should do that. But obviously, Pick n Pay will retain, I think, 2/3 or so of the shares in Boxer post the IPO. So they'll still have a meaningful exposure to Boxer. And I think one of the things, obviously, that's impacted Pick n Pay over the past few years is the underperformance of the core Pick n Pay brand. And that's what's going to put a pressure on the share price. So what you have now is almost like on a sum of the parts, Boxer being obviously listed, and it comes in at probably, I don't know, for a 25 to 30 billion valuation within the Pick n Pay share price. And then you've got sort of the core coming in as the balance. And I think one of the things that's encouraging about Pick n Pay is that despite the core having been underperforming for the past few years, there has been evidence of a turnaround. They've obviously brought in Sean Summers, who's been the previous Pick n Pay CEO in the early 2000s. And he's doing a lot of work to right the ship there. And I think there might be some benefit in holding some of the Pick n Pays, because you still will have the Boxer exposure, but then you will have a core that's also turning around. And then obviously, I mean, look, Boxer is a very strong business, high returns, good sort of trading densities. A lot of people are comparing it to the likes of ShopRite for a similar type of quality. And that's what you'll have in a Boxer listing directly if you want that. But I think there's this opportunity in the core Pick n Pay as well.
Yeah, it's been quite interesting because you're also wondering if, because we see there on the chart that Pick n Pay has actually rallied in the last few months, and you wonder if it's maybe people who believe in the actual turnaround story of the core business, or maybe just the value unlock that's going to be coming from Boxer. Maybe it's both.
Yeah, a bit of both is coming through, I think.
All right. Well, let's go into We Buy Cars. They released results for the 6 months this week. And actually, there's a compliment here. Thank you for the great program. I have adjusted my working hours to watch the show. Thank you very much for that support. We really have great analysts here. So on We Buy Cars, is it too late to jump on the We Buy Cars bus? Or car. I think it should be car.
Well, it might be bus soon, because the way they go, you might start trading buses
actually.
as well. So it's a great quality business. It's a business that obviously the previous sort of transaction capital guys had identified as a good quality business, and rightfully so. This past results showed that they were able to actually flex kind of their trading activity, and they, kind of printing about, I think the number was 14 or 15,000 cars a month. They say they want to push that number up above 20,000. I think they're forecasting 23,000. I'm not sure about the timeline.
Yeah, 23, yeah.
So you can see that they've been able to actually entrench themselves in the used car market. And I mean, with the consumer under pressure in terms of buying new cars and maybe trading down into used cars, that kind of benefits We Buy Cars, obviously. And they have positioned themselves as kind of the premier online service for such. So all of that is kind of coming through. So all of that is helping, their kind of turnover numbers, their cash flow numbers, their return numbers. So, I mean, it's been a strong business, strong performer up till now. I mean, the share price has doubled since listing. So, I mean, there's a bit of that for you to consider. But I think given where they are in kind of their growth curve, there might be some further opportunity from here. I think one has to make up their mind about what the valuation is, but I mean, I think there's still some earnings growth that is probably still going to come going forward.
It's been a very, very interesting business to watch there. I think at some point, I think maybe around about COVID or just after, we're all wondering if they had reached the peak. But it's quite interesting the strategic moves that they're also doing to really just grow the business there, also geographically. So quite an interesting one to watch there. Let's go into banking, Sanelisiwe. Nedbank, is it still a buy? I guess maybe we can also just talk about the general banking sector that has had quite a lot of appetite from investors.
It's quite a broad question, but I will say this. So if you look at the performance over the past year or so, say year to date, I mean, Nedbank has been a very strong performer. I think it's only second to Capitec, which is considered a strong growth type of name. I think from a banking perspective, a lot has been priced in, I think, into the Nedbank price, even though I think the sector as a whole is going to benefit from hopefully a declining kind of credit quality experience as rates come down. Obviously, the top line might feel a bit of pressure as the rates come down, because obviously they earn interest. But I think there's a much bigger opportunity from the improvement in the credit costs that come with lower rates. So I think a lot of that has been factored in. I think the GNU has helped the kind of the perspective about growth in South Africa. So I think that will help with regards to credit appetite and also their ability to actually have confidence in the quality of the underlying consumer in order to lend more. And obviously there's stuff like renewables, and the likes that are expected to add a bit more. So I think the prospects for the banking sector are somewhat positive, obviously tied more or less to the economy, as far as the economy prospects are positive. But with regards to Nedbank specifically, I think, in my view, there might be more attractive opportunities in terms of valuation. Like I said, Nedbank has ran quite a bit ahead of the other big four, if you take out Capitec, but the likes of Absa, I think, presents a bit of opportunity despite some of the management challenges. And I think also FirstRand is always going with a good shot just because of the quality,
I feel like banks are quite lucky and really quite defensive, looking at the fact that they can operate really well in a high interest rate environment and also in a low interest environment. It's also been quite interesting to see, as much as ABSA has underperformed, that even that investors are still going into it. So yeah, I guess also we're just waiting for the high tide, I guess, from the more positive economic fundamentals to lift the ships there in the banking sector. Let's go to MTN. What's your take on MTN? I know the Nigerian currency is having an impact, but what are the chances of it going back to the 260 mark? Is it worth a hold or sell? Yeah, this one has been under a lot of pressure, and of course, really seeming the big dark spot is Nigeria. Your take there? Do you see it as an opportunity or maybe just sitting on the sidelines?
So, I mean, from our work, MTN seems to be close to fair value, where it is at the moment. Obviously, a lot depends on what happens with the Naira. Nigeria, it had a period where it strengthened a bit, so that benefited them, and then now it's kind of pulled back again and started to weaken again. So that obviously puts a bit of a headwind on the translated earnings back into rands. And obviously the operating conditions in Nigeria with sort of relatively high inflation, and also kind of the rates there being high as well in order to combat said inflation, is also kind of putting a bit of strain on the consumer. So they've been waiting, for tariff increases and the like to help them. But Nigeria is a bit of a challenge. And then you combine that with the South African environment where it seems there's quite a bit of competition from the likes of a telecom. So it's kind of putting a bit of pressure on sort of service revenues there as well. So I think, valuation-wise, it's fair. I think operational-wise, I think there's still a lot that's going a little bit against them in my view. So I think around fair value, you might want to look at opportunities elsewhere, in my view.
Yeah, I'm actually looking at the share price. It's 80 Rand, and the viewer is asking if there's a chance of it going back to 260. That's quite a stretch. That would require a lot, hey?
It would require a lot to go right for them.
Yes.
It would require a big turnaround in Africa, because remember, outside of Nigeria, they've got other sort of African operations, Ghana, and the likes, and then other pieces contributing to that. And then it would need a lot to kind of turn in South Africa as well. Just a decent sort of growth number to come back in South Africa as well, before you can say that it goes back to 260. I don't know if it ever will, but a lot needs to work before it goes there.
Well, let's go to another one that has experienced a lot of pressure. I think the last time I checked it was 93 Rand. That's Sasol. And I remember, I think just about 2 years ago, some institutional investors had target prices of 500. Crazy where it is now. So quite a few questions. What's your outlook on Sasol? Should we sell and run for the hills with our loss? So a lot of people have really made losses on this stock. What's your take there?
So Sasol for me is a bit of a head scratcher. It's certainly screening cheap when you stack up the numbers. I think we've got decent upside just on the valuation. It used to trade quite in tandem with the oil price at some stage. I think that relationship has broken a little bit now. In fact, there might be, in what I see, a little bit of a higher downside correlation to the oil price, where it moves with the oil price lower, but it never kind of tracks it back up higher. So it's a weird dynamic. Obviously, there's still some question marks around capital allocation and where the balance sheet is going to be in sort of the next forecastable future, and whether or not they keep their U.S. operations or kind of sell those in order to short the balance sheet is another question. So there's still, I think, more questions than answers with regards to Sasol, but I think it is quite cheap. It used to be like I said, an oil play, so that kind of speaks to the macro and everything else, but that relationship seems to have broken in recent history. So I'm not sure where to go from here.
Yeah. Well, also with ArcelorMittal, a lot of investors don't know where to go. Well, a lot of have actually sold. Also one that has more questions than answers. So many headwinds. And yeah, the viewers asking about your view on ArcelorMittal. Yeah, what do you do with a stock where it seems that the headwinds are never ending?
Yeah, to be fair, not one look at too closely.
Yeah.
But I think one of the things that that could potentially offer some value is if the kind of larger ArcelorMittal group,
Yeah.
the global company,
Yes.
comes in and takes out the remaining shares that they don't own and maybe operate it privately. Because one of the questions we have is, does it serve them to be actually publicly listed? That might help them, in order to successfully turn around that business outside of the public eye. But away from that,
Yeah.
I don't think, I've got necessarily any informed views around it.
Yes. All right. Well, Sanelisiwe, let us get to your stock pick for today. What are you choosing?
So we've already talked about this company, and so I'm picking Pick n Pay. I think there's been a lot of excitement around the Boxer listing. On our work that we've done, I think we were doing this work sort of in the middle of the pricing range for Boxer, and our sum of the parts came out to about 34 Rand for Pick n Pay as a group. So you can see, I mean, it's tracking towards that, but it's still got some decent upside up to that. And I mean, it looks as though, there's a lot of excitement. So possibility that Boxer actually trades much higher than what has been offered in the kind of announcements. So there's good upside for us. And I think, as I said earlier, the core Pick n Pay brand, which has been the problem in the past few years, is also showing signs of turning around. The new management has gotten stuck in, and they've been doing work to fix that. So I think if that turns around as well, so I mean, that could take that 34 Rand, to some higher number as well. So I think Pick n Pay is a good option at these levels.
Yeah, interesting, because yesterday I had someone picking Boxer as their stock pick. So yeah, it's going to be very interesting to see what investor appetite looks like next week when a Boxer does open, but also, what people think of Pick n Pay going forward. Thank you so much for your time and for your analysis today, Sanelisiwe. Really, really appreciate it. That was Sanelisiwe Tofile from All Weather Capital. And that's all we have time for this evening. We'll be back next week, Monday at 6:30. So be sure to send through your stock-related questions on email at stockwatch@bdtv.co.za or via SMS on 41392. For now, we bring you more business analysis right after the break, so stay watching.